Good morning, good morning. It is 7:35 a.m. Tuesday, November 8th, here for my pre-market analysis and trade ideas video. So as usual, starting with the economic calendar, for today, there is absolutely nothing going on in the New York session and the London session overlap. There is zero important economic data today. So having said that, there's no data today, but the big focus for the week is coming up, not tomorrow, because tomorrow there's no data as well, but it's coming on Thursday, where we have the core CPI and the CPI year over year, month over month numbers, and the initial jobless claims as well. And on Friday, I believe we have some data on Friday as well, the Michigan consumer expectations and sentiment recordings, and some important GDP data over the London sessions as well. So having said that, when you come to the trading day and there's no economic data, well, right away, you're asking yourself this question. Well, is there a clear sentiment in play, or are we going to just be expecting some low volume and volatility? Well, you need to go to the equity markets and the dollar and see what's going on. And let's start with the dollar here. We are maintaining this bearish structure. So we've been playing this weak dollar sentiment as we've had the major sell-off on Friday, accumulation of orders, new lower lows, and then we were playing also the US dollar weakness in yesterday's New York session, where we got some good gold buys, and we got the DXY continuing its weakness. But now overnight, seeing some exhaustion from sellers, and we're coming back and having some indecisive price action here as we're entering this sort of range here. And that makes sense. When there's no economic data, the price action on dollar is ranging and indecisive. Well, it's pretty safe to say that it's going to be a slow day. It may be ranging. There may not be enough information for investors to really take heavy positions and start moving the markets here. And on the equity markets as well, we have been, similar to the dollar, holding this optimistic sentiment with this pullback, had some nice buys on the retest of previous structure in yesterday's session, new higher highs, and then over the London session we retested this previous structure level and have rejected, actually printing some new highs briefly before getting canceled out, and now it's starting to close back below this range. So now I'm going to identify this range right here. Now if we can see the S&P 500 close above and start pushing above these price levels to the left here, which is around 38.20, 25, let's say. If we can get above 38.25, well, this shows me that the optimistic sentiment is holding and we are continuing on our bullish run on equities. And now I'm going to correlate that with the dollar breaking back below our previous zone as well. So if I go to the dollar chart, and if the dollar starts breaking back below these previous lows here, starts breaking back below around 110.20, well, then we could also validate that the equities are pushing stronger, dollars pushing weakness, and we can see potential continuations of that optimistic sentiment over the New York session today, right? But if we don't break back below these lows and we stay between this indecisive range right here, well, we're going to see messy price action, and it's best to just stay away from the charts, right? And now the opposite is true. If we start breaking back above 110.6, well, we could see more of a relief rally on dollar, continued weakness on the stock markets if we break back below 3,800 area, 37.95 previous structure, and start reversing here well, then we could play the opposite sentiment. But so far, we have no clear sentiment to play. And on gold, we have similar indecision here, where we are just basically stuck between this range, where we came up and printed these new highs. And in yesterday's session, we had a nice new higher high on the 1 hour time frame, retest of structure and liquidity zones, a retest of the highs, but then low volume set in and buyers exhausted. Sellers came back to push gold right back to the bottom of the range, but then buyers stepped back again, pushing back up. So we are ranging between the 1667 level and the 1680-81 level, and there's no clear sentiment here, potentially just waiting for the heads up from the inflation numbers later this week. So I'm going to be extremely cautious, probably just going to take the day off if I don't see any clear sentiment going on in today's session. Potentially just eyeing, again, the stock market. If we break back above these highs, I'm going to send an alert here. I'm setting an alert above these highs and below these lows. Right? So that means I'm going to be alerted if the sentiment becomes more optimistic again, then I might look for some trades. And again, on dollar, I'm going to set an alert below these lows. So if we break down below 110.25, we're breaking new lows, we're respecting this bearish structure, well, then I could start playing some dollar weakness sentiment, confirming that with the equity sentiment as well, and I'm going to send an alert above this high as well. So as long as we stay between these highs and lows on the dollar and these highs and lows on the stock market and these highs and lows on the gold, we're just ranging, no point looking between the range for some trade ideas. Just going to be waiting for sentiment confirmations to come into play and for some clean price action. So for now, no trades for today, no trade ideas that I'm going to share, just waiting for those sentiment confirms. And again, no economic data, so there's no, unless we get some reactive headlines in the newsroom, there's nothing going to, there's no reason for gold or asset classes to do some crazy movements today, as again, the most important data is coming on Thursday.